Hello guys, I hope you are doing good. So currently we are having health issues because of COVID-19 and we have nationwide lockdown and which is going to result into an economic slowdown. And we were already facing issues of asset liability management and liquidity crisis over NBFC. And if we couple this all thing together, if we put this all things together, what we can see is difficult times ahead in the lending market. But there is something known as co-origination or co-lending. It is, in my opinion, it is the next big thing for the lending market. In simple words, co-origination means when a bank and NBFC come together to disburse a loan. It's kind of a partnership between a bank and NBFCs. To this effect, we have guidelines from RBI, and I would put that in the a link in the description where you can check out those guidelines and refer them. So what will be in this video? In this video, I'm going to brief you about this whole partnership. What are the different aspects, the advantages, and some of the nitty-gritties in this partnership. So let's dive deep. In today's market, the aspirations of individual and corporates are growing at a tremendous speed. At individual level, everyone is expecting that his or her loan would get sanctioned, the amount, whatever amount he wants, the desired amount, and at a desired interest rate, which is not the true picture. At the same time, at corporate level, every corporate wants to have increase in his in the market, his share in the market, and wants an growth on quarter basis, year on year. But this both goals have so many challenges in between. So let's see what are these challenges. First, we'll look into the banks. Banks are having some geographical restrictions, so they are unable to reach to the all the customer. And second is demand. Customer currently have demands where you need a customized product for them, which is not that easy to have that policies in place where you can give a customized product. And the third thing is the risk. The risk of such loans are quite high, so which may not be feasible for a bank. Next is NBFC. The new NBFC. I'm not talking about the NBFCs which are in the market since long. Apart from that, all the new NBFCs and the growing NBFCs have lesser funds. They do not have that much funds, sufficient funds. So there's always scarcity or no access to the funds. Second is the funds which they have a huge cost attached to that. So the cost of capital is quite high. And finally, the customer segment or the market share that they own is comparatively riskier, which in turn increases their risk to reward ratio. And for survival and growth of any company, the risk to reward ratio should be at minimum. And at the ground level, what customer is facing issue is he or she is not having access to the funds, is not having access to the loans because of geographical reach or any other area or the profile, anything. On the other hand, to fulfill his requirement, he may take a loan at a higher interest rate. At the same time, he may also opt to get the loan or the requirement from unorganized sector, which is even riskier. So these are the challenges which we are facing. But co-origination or co-lending can help to overcome this thing, and it can help to fulfill all of their win-win uh, requirements. It's a win-win situation for all the parties. So let's see what are the key aspects in the co-origination or co-lending. First is team structure. The both the organization, bank and NBFC, should come together and form an alliance team where they can define the whole process or the agreements of co-lending. And the team should have representative or experts from all the fields like business, that would be sourcing, credit, risk, operations, collection, legal, everyone, so that each and every aspect of the loan cycle is covered in this stage. Next is sourcing. Well, since we already discussed that NBFC would be having a higher geographical reach, the more geographical reach, so that sourcing should be done by NBFC itself. However, with power comes responsibility, and the sourcing should be in such a way that all the NBFC people need to think about the source customer from risk and credit point of view. Next is underwriting. Since it would be a difficult untapped market as such, it would be difficult to assess the credibility or credit worthiness of the customer. So innovative ways should be thought out by the credit or appraisal team uh, wi- while doing the underwriting. Even you can take the help of fintech players who who have expertise in this field. Next is operation. The operation should be digitalized, and it should be in such a manner that it can help both the company, that is bank and NBFC, to have a to operate without any issues. Next is collection. Now NBFC's expertise can be used at this stage, and many innovative ways like EWI, setting up EWI, that is early warning indicators, can be there in the system, which can help us to act proactively for the customers who may default in the upcoming time. So these are the key aspects of co-lending. We'll cover the features of co-origination. This is, you can refer these things from the RBI guidelines itself. First is sharing of risk and reward. As per the guideline, at least 20%, that is minimum 20 percentage of the exposure, the direct exposure, should be taken by NBFC, and rest would be in the bank's book. So if 100 CR is being disbursed, then at least 20% should be in favor of, I mean, the risk should be with the NBFC. Next is interest rate. At this stage, both bank and NBFC should have the flexibility to, you know, charge a rate uh, as per their exposure. Next is KYC, know your customer. Both bank and NBFC should come up with such guidelines where KYC policy, or in such a way that KYC and AML guidelines are being, adhered, and as it should from time to time by Department of Banking Regulation and Department of Non-Banking Regulation. Next is loan sanction. The loan sanction uh, should be in such a manner that whole credit can be looked upon, and it should be a seamless digital experience for the customer as well. Next is common account. So an escrow account should be opened where the all the funds from the bank and NBFC should be for disbursal should be going through and should be given to the customer. At the same time, all the repayments towards the loan should be collected in that escrow account and later on disbursed to bank and NBFC. Next is monitoring and recovery. Monitoring and day-to-day activities and recovery should be, uh, you know, should be kept at the should be done as per the mutually agreed terms with by NBFC and bank. Next is security and charge creation. The lender will create charge and security as per their mutual agreeable terms. Provisioning and reporting requirement. The NPA reporting requirement should be, and provisioning of NPA and the reporting should be done by both bank and NBFC at their own stage as per the regulatory guidelines by their regulators. Next is assignment or change in loan limit. So if there is any change in the loan with respect to any of the terms and conditions, then it should be it should be approved or agreed by both the parties, that is bank and NBFC. One organization should not do the same without any approval. So it should be a mutually agreed change. Next is grievance redressal. The front lender would be the lender who has to explain the customer the details, that what is the difference between a product of regular NBFC and a co-origination, and at the same time the grievances which are received by the customer by either lender, that is NBFC or bank, should be addressed and followed and resolved as soon as possible. At the same time, if they are not resolved within 30 days, then a customer can escalate to the banking ombudsman or the ombudsman of NBFC. Next is BCP. Both the companies should come up with a BCP plan where all the operations can be saved in case of any problems, and till the all the loan accounts should information, everything, data should be collected and should be there with them. So that's it. These are the features of origination. And regarding interest rate, RBI has shared in the guideline has given two examples where they shared how interest rate can be calculated based on the exposure. We'll go through those two examples. First is fixed interest rate. Now suppose the NBFC is having a stake of 20% and bank has a stake of 80%, and this is a fixed interest. So benchmark interest rate, that is the base rate, that is 8% in case of bank, and NBFC has a higher cost of capital, so 9%, and bank's spread is 2% while NBFC spread is 3%. So effectively the customer's interest rate would be 8 plus 2 10 and 9 plus 3 12. Now bank's exposure is 80%, so 80% of 10, that would be 8%, and NBFC is 12%, has exposure of 20%, so 20% of 12%, 20% of 12%, that would be 2.4. So 2.4 plus 8, that would be 10.04, sorry 10.40%. So this is how can interest rate can be calculated. At the same time, if there is a 30% exposure, then 12 into 30, that would be 3.6, and here 7%, so 7 plus 3.6, that would be 10.60. So depending on the exposure, the interest rate can be changed. And now this is the case of a fixed interest rate. Now let's assume that's a floating rate, that's variable rate. In that case, again the same scenario: 8%, 9%, 80%, 20%. Now the weighted average benchmark would be 8 into 8, that is 6.4, 9 into 20%, that is 1.8, and if we combine it, we would get 8.20%. Now this is the benchmark rate. The spread as such 2 and 3. If we again do a weighted average, that is 80 into 2 and 20 into 3, we get 2.3%, sorry 2.20, and if we combine with both of this, we get our rate 10.40. Now going forward, if there is a change in variable rate, the base rate, let's suppose for bank's rate is not changed, so 8 remains 8, and there is a positive 1, so increase of 1% in the base rate, then NBFC's interest rate would go by 1%, that would be 10%. In that case, revised base rate would be 8 into 80%, that would be 6.4, and 9 plus 1, that would be 10, 9 over the base rate which was it was, and the new change of 1%, that's 10%, 10% into 20%. Okay, so that combined would come to 8.4%. So this is the new rate, and you add the new base rate plus the spread, that is 2.20, and you get a new interest rate, that is 10.60. It may be a little bit confusing, but you can stop this video right now and watch it, and see the calculation by your own. It's very simple, and the mathematical calculations is already shared over here, right? X is equal to A into C plus B into D. So A, B, C, D, so everything is given. So it's not that complicated if you just go through once again. So this is how floating interest rate comes. And one thing I would like to share over here, this both examples are just for illustrative purpose. So it may happen that bank and NBFC can come up with a new idea, a different way for calculating the interest rate, but that's upon mutually agreed terms. Now coming to the advantages, what are the benefits we are going to get from this co-origination? First is increased customer reach. The non-geographical areas where the geographical areas where the funding were not done, we will be doing that. Next is tap new customer segment. New type of customer will be funded, like farmers or the person working at the farmers or laborers, so on and so forth. Next is creating customized offerings. So a different product can be created or customized as per the requirement of the customer, and by charging a higher interest rate or charging higher fees. Next is utilizes NBFC's expertise in sourcing and recovery. NBFCs have a geographical reach, so it helps us to get the sourcing because of in the co-origination model. Lower interest rate, easy access to loan for customer, get rid of liquidity crunch because NBFC would be getting the funding from the bank. Increase the AUM, that is asset under management, without funding related challenges. Survive the NBFC crisis. Shared risk throughout the loan cycle, since 20% or 80%, if you are a bank, then you might be thinking 20% is already taken care by the NBFC, and for NBFC 80% is taken care by banks. So the risk is shared throughout the loan cycle. Next is meeting the priority sector lending targets as given by RBI from time to time, that can be targeted through this manner. Now this whole thing is going to revamp how the things are in the lending market. So any new thing right now in any organization comes, then we need to be technologically advanced. So there are certain technological upgradation that needs to be carried out, and I'm just going to go through some of them. Technological upgrade we would need in such partnership. First is digital customer experience. The customer the partnership should have a digital platform which should be very seamless. Like, it should allow the customer to do all the transaction digitally, right from the processing, that is sourcing or login of a file, till the end. Next is integration with core system. So as you are aware, bank would be having their own core system, at the same time NBFC would be having their own core system. There should be a middleware which should be so robust that the data of a joint loan, that is co-originated data, should be accepted, and it should be integrated with the core system. So for that, a robust middleware should be developed or required. Next is DBMS, that is database management system. Data maintenance should be carried out and all the security guidelines should be followed as given by the RBI from time to time. Because if there is even a small leakage of data, it will be very crucial to the reputation of the organization, because the data would be confidential in nature of that customer. So to avoid that, a good DBMS, that is database management system, should be in place, secured. Next is escrow management. Now, as we already discussed about an escrow account or common account, I just want you to imagine a situation where there lacks of how a dispersal would take place. So bank and NBFC would share the fund in a common account, and that common account would disburse that loan. From that common account, the funds would be given to the customer. That would be disbursement, and at the same time the customer would be repaying to that common account, and from that the whole repayment what is received should be divided into two parts for bank and NBFC, and should be given to them. So this whole thing, if just a simple thing, it's just about one file. But think about if there are so many loan accounts, then it would be very difficult to manage this. So automated system should be there in place, where this whole thing can be done automated, without any issue. At the same time, there should be such a system where you can do the reconciliation. So if there is any mismatch in receiving the payment or payment done, then there should be a proper reconciliation method that can be executed at any given moment of time. Next is regulatory and internal reporting. Now all the seniors in the organization would be required the MIS or MIS reports to take some decision for on the future of the this co-origination model. So necessary reporting systems and structure should be developed to get all the reports as required by the management. Next is CIBIL reporting. Technological advancement should be done so that bureau reporting is done properly. Because if, for example, if a key data like PAN card detail is not captured in the system or not recorded, and it is not made mandatory, then it would lead to an issue while sharing your data with the CIBIL. Report with data would be captured. And these are the technological upgrades. Now we can think about what are the what are the current banks or NBFC that are there in the co-origination, and they are working. So I'll share some examples. Like Adelby, it has tie-up with several banks like State Bank, Central Bank, Bank of Baroda, Punjab National Bank. At the same time, IMGC is also having tie-up with ICICI, Axis, and so on. Even SBFC is having tie-up with ICICI Bank. So there are so many NBFCs which are having such tie-up, and banks having some tie-up. To know more about them, you can either check their website. The contracts would be available. At the same time, if you want to see the profitability, how could they have performed this model, you can check out their financials, because all the details would be shared in that annual reports. You can also check that, and annual reports are available or would be available for free on their website, since this all are listed companies. Of course, I'm not like Edelweiss, SBI, all are listed, so you can get the data. What I will do is I will share a link in the description where you can see some of them, their contracts. So if you want, just want to have a, you know, like how it is, what are the terms and conditions that they have agreed upon. If you want to just go through that, I already went through a couple of them, so it's really amazing. Like what are the nitty-gritties that even covered that. So anyways, that's it for this video. I hope you have enjoyed this, and if you have any question, please let me know in the comments below, and I will help you out. And this is a little bit of the video, quite frankly, for my channel. It is a little bit, the details I generally don't share, go into the nitty gritties of guidelines and share it on a video. But how about this? If you this is first time, so I would really appreciate if you can share your feedback. If you dig this type of videos, please give me a like, and in the comments mention that in the comments, so I'll understand that you love this, and I'll put more videos like this. Okay, anyways, thank you. Thanks for your time. Bye.